All right, welcome. This is Selling Houston P.O.V. I'm Bernard, and I have
Ebony Royal.
And we have two special guests today.
I knew you were going to do that. I'm Shelton. I was here last week and the episode before that, too.
I don't know. Two in a row.
It was two because
two
we
in a
filmed
row.
two at the same time. But the real special guest.
It's WaseemBari with Jet Mortgage. I'm the owner of Jet Mortgage, guys. But I'm really grateful that this is my second podcast with y'all, and I'm really glad to be back.
First time we were drinking it up.
We had a couple. I already had a couple.
GO3
GO3 vodka.
Yes.
Shout out to Sparkle and her husband on a phenomenal drink.
Yes, it is delicious. And I really need to get another bottle.
Me too.
I know.
We should get another bottle.
We should. We should all buy one.
Yes.
Well, Aisha doesn't drink.
We should all go together.
And buy
Let's do
bottles
it.
and take pictures.
Because I think she's in the Specs downtown.
I heard.
Is she in the Specs downtown?
Yeah.
I was being lazy. I tried to DoorDash it.
Oh.
Could you do that
Instacart.
shit though?
No,
It's
so
not
the
it. You
four
have to
of
go
us,
in.
One day we're gonna meet
So
there.
is GO3 an official sponsor of Selling Houston P.O.V.?
Not yet,
Not
but
yet.
our
Not
philanthropist
yet, but just
lady
saying.
will get on it.
Hey, actually, you know what?
Not my job, but I got one for you.
Actually,
that.
I do want to do that though. Like, we should. Jet Mortgage should sponsor y'all. Like, we should get it done.
Waseem, you don't have to be so nice to us.
I just want to come back. I
can't
just
be
like
on
talking to y'all.
Heck yeah, you come back, but I can't be on this camera crying. You can
Don't do that.
Look, talk to Aisha.
right. So
How I got a job out of all the other jobs that I have.
Aisha is going to reach out to GO3 Sparkle. She's coming. Please answer her call. Don't avoid her.
Okay, Sparkle.
Wait, is that what she do? You see what
No,
he's trying to throw you under the bus, Sparkle?
but they're very, the event that we're going to is, I think it's been sponsored by them later today.
Yes.
They are.
A partial sponsor, right? Because it's multiple sponsors. But hey, we got so much to catch up on. I know we missed our last show last week or week before last, or last week. I was in Mexico sweating it up and living my life and throwing up on the last
Damn,
day.
that's nice.
Oh.
Yeah,
I wish I was
on
there.
the last day.
Yeah, he's like, Eb, I painted the wall. I was like, you painted
She's like,
the
what do you mean?
wall?
And I was like,
Disgusting.
and did.
But no,
Oh,
The whole wall.
those poor people who work there, like,
One of the guys, he was like, are you okay? And I was like, no.
oh my God,
He's like, you want some water? Yeah.
awful. Just
Yeah. Everybody be in my
you know
20s.
what?
Everybody needs a taste
I
of their
was going
20s.
to say once every 3 years, you got to have
Of
one of
course.
those.
And it's been probably about 5. Real estate made me a boring person because I think a lot and I want to go home
I think
and
I
rest.
had one last year, actually.
And I want another one this year, to be honest with you. But hey, we got so much going on. Ebony and I just recorded our first commercial for Snap House. I cannot wait for you guys to see it. Aisha and Park Street Homes have a lot of stuff going on. It's a new community.
It's a new development. It's a 2-pack.
Okay.
Hampton style, 3-story, right off of downtown Houston with downtown views.
All right.
And also, my husband and I are going to be co-chairs for Preservation Houston's Good Brick Tour. So we're the first African-American chairs of this fundraising event.
I love it.
And fingers crossed, we'll be the highest raising chairs as well. So
I thought you would say highest paid. I was like, wow.
no, you don't get paid.
I know.
It's all out of the goodness of our
It's
heart.
But
It's
it could
no
equal
fingers
up to that,
crossed.
and
right?
the preservation of Houston.
Yeah, that's your thing. Like, I feel like that's just your niche.
It is.
Yeah.
It's utilizing relationships
Yes.
to raise money for good causes.
Yes.
So y'all, that's my next calling. I'm a realtor and owner of a residential real estate company that builds, but my next calling is philanthropy.
oh wow.
Yeah.
So
What's up?
you guys, if you guys don't know this, Aisha is from Galveston, right?
Wait a minute.
And I'm a visionary.
Where's this going?
I'm being nice today.
Okay.
sis.
I'm like, this is his nice face.
Yeah.
And his nice tone.
So Ebony,
I wanted
she
to
just
say,
knows
wait
me
for
so
it.
well.
I wanted to say, wait for it.
So I could just see Aisha, right? You know, mind you, she's from Galveston. I could just see her. She's a philanthropist, right?
Yes.
I could just see her in her G-Wagon or her Escalade or her Range Rover pulling her boat.
Boat.
That's a good look.
Pulling her boat to her home and just on the water and just saying, this is how we do it.
I'm thinking more like south of France. Morocco. that.
Do you or do you not want a boat? Like, yes or no? Like,
On a boat.
Do you want to own a boat?
It's a yacht.
Not a boat, a yacht, right?
It's a
You know,
yacht.
It's just stationary.
I
want both.
It moves.
And we digress.
We digress.
I want both.
Digress.
I cannot wait to have a boat and I can pull it with that Tesla. Not the one I have, but
First
the
of all,
SUV.
I can't even imagine it. Like somebody else gonna be pulling the boat and you just show up in your drop top.
I want to pull the boat. I'm not driving it.
You do want to pull
Hell, that is that's a good look. Like, look at him pulling this boat.
Talking about a digression.
And my license plate is gonna say Snap V, so you can be like, look at Snap V pulling that boat.
All right.
Everybody
Okay.
name.
So let's
Okay.
let's move on to our topic of choice.
I love y'all, man.
Here's the thing. We got our guy over here, and he's going to the Astros game in just a minute. Like, let's get this show on the road, y'all.
No,
See how they do me, guys? See how they do me?
Come on,
All right.
Waseem. Listen, tell us a little bit about the interest rates. What's going on in the market? How can we? Give us the real. Give us the real. People
Man.
are out here scared and, they haven't seen rates like this in many, many years. So
yeah, the last time we saw rates like this, guys, was in 2002, 2001, where the average rate was about 8.5%. We haven't got that high yet, but I think it's coming. And the dynamic is behind it is we've been spoiled since 2008, right?
Mm-hmm.
The economy has been up and downs and this and that. Oil's been up, oil's been down. COVID obviously was a big impact when it comes to the economy. And all that's going to be, but the government's figured it out. Like, it's cyclical.
Yep.
We're going to see high rates, we're going to see low rates, and it's going to come back around. We just don't know when.
right.
But that should not stop you from living your life and owning your own home.
Mm-hmm.
A lot of people are like, hey, well, I'm gonna, like, I don't know, 7%, 8%. Well, think of that as the new norm, because you've seen interest rates so low in the past that you're kind of spoiled, the consumer market has been spoiled. But banks are coming out with programs, and banks are coming out with different models to kind of bring those rates back down, to kind of get you there to say, hey, you know what? Yeah, we can still get you the lower rates that you're so used to.
Right.
It may not be as low as the COVID times, but we're still able to get you there. And I think that's the reason why I'm here tonight, is because I want to make sure that everybody understands and everybody is kind of learning about the new programs that are coming out. But all in all, don't stop living your life, guys. I mean, you're paying if you're a first time home buyer, you're paying 100%. You're paying 100% of interest.
Yeah.
And you don't want to do that. You want to build equity. You want to build the American dream, and the American dream is to own a home, and everybody is entitled to it in this country. And I think that we live in a great country that we can actually, give that to people. Because remember, if you go to Europe right now, you go anywhere else in the world, you don't get a 30-year mortgage. They stop 30-year mortgages in Europe. You're on a 3-year balloon. You got to refinance every 3 years.
Yeah.
But hey, I have a question for you before you get into your thing. So I invited Ebony today, Ebony and her mom. I said I wanted to have coffee and beignets. And we were discussing some stuff, and I was like, I want to invest. And correct me if I'm wrong. People always say now is the time. I feel like now is the time to buy real estate. Like, I've seen some stuff and I'm like, oh my God, it's a house under 300,000 Midtown. Like, I could buy the interest rate down. Like, this is the time to, and this is the most scariest time when people are backing out. I want to buy right now. I want to buy 3 houses.
I'm like, every cycle is an opportunity, right? So we had the interest rate opportunity, right? So now we have the rate buy down opportunity. We have, every single cycle, whether interest rates are whatever, 10%, or whether they're 1%, there's always an opportunity when it comes to real estate. And I think it's really just understanding that. You were talking earlier about, different models. There's a lot of creative financing out there now,
and you're seeing a lot more private money come involved in the industry, where it's like, we know that the rates are higher, but it's the new norm. You know, it is the new norm, guys. 2 years ago, you would never think about getting a private money loan. Interest rates were like 8-9%, but now these private monies are so close to the 9-7%. And think of it this way, because when you say like, oh, I'm going from a 3% to a 7% or a 3% to a 6%, but remember, guys, like at the end of the day, no one keeps their home for 29, 30 years anymore. Like you got to remember that the average American keeps their house 5 years. Yeah. 5 years of interest is nothing compared to 30 years of interest. You may be in this house for 10 years. Dang. If you're in this house for 10 years, you're not going to be in this loan because rates are cyclical. You got to remember that every time that I've ever told one of my customers is, and they snap out of it, they're like, oh yeah, you're right. I plan on having 2 more kids in the next 5 years and I'm going to need a bigger house. No one keeps their house.
Me scratching my head. You don't say.
Yeah,
so
right.
you're not marrying this house.
Yeah, you're not marrying this house, right?
Absolutely.
And from an investor standpoint, honestly, we've been paying 7 and 9s anyway. Correct. We're using private financing to buy houses. We're gonna buy. We bought houses then. We're gonna buy houses now. And you know what? We are not shocked by these these prices.
My client today.
You know, so even with, I'm sorry, I didn't mean to interrupt, but you know, with the new HARS statistics that came out, it's the price points of $500,000 and up have rose 18%. Because the people with the money don't care.
So back to what you were saying, because I want to make sure I want to answer your question. Was you said now is the time to invest in real estate, and I agree with you 110%, is because as inflation grows in this country and as inflation grows throughout the economy, for the first time since 1997, you have the Japanese government buying back their currency. What is the number one thing that you cannot get more of? You can always buy. You can always inflate the currency. You can always downgrade the dollar. The dollar has been the strongest it's ever been now since ever. Right? It's almost surpassed the euro. It's almost surpassed the pound. I mean, we're almost right there. But in this country, you can still buy a home on a 30-year mortgage and still get a decent rate and still put less than 20% down. Take advantage of that, because in any other country in the world, you can't do that. Yeah. But to answer your question, there's no more land being made.
Oh, dang. I was not expecting you to go there.
You are.
So,
it doesn't. Gave me a chili bow. I thought I had a haircut, but you just cut the little piece of my hair off.
So that's what I want to, that's why I like to bring knowledge whenever I do something like this, is there's no land ever being more made. Like you cannot make land. So take advantage now. And it doesn't matter if you're paying 18% more on a house or you're paying 9% in interest. Think about it this way: in 20 years or in 10 years or even in 5 years, there's no more land. There's no more land. What you got is what you got. And you're going to be like, think of it this way. Have you ever seen the movie Urban Cowboy?
No.
It's with John Travolta, right?
I'm sure I saw it.
All right. Okay. The reason why I bring that up is because this building is actually in the movie. Yeah. So it's the penthouse that they're selling here was actually in the movie. And the reason why I want to bring that up is because in that movie, there's a footage of John Travolta driving down the freeway, and you can see downtown Houston, really, really like impeccable. It's a beautiful shot of downtown Houston. Look at downtown Houston now compared to there. Like you can still see land in downtown Houston.
Yeah. Wow.
And you can't see land anymore.
Yeah.
So it doesn't matter 5-10 years or whatever. If you invest now, I guarantee you that in 5 years or 6 years or 7 years, no matter what inflation does, no matter what, there may be a market crash. House prices may come down a little bit, but not enough to where you're going to say, oh,
zero.
There's more land.
Yeah.
Right.
Yeah. So I had
you make such a great point.
That was a great point. I had a very educated conversation with a client today. And obviously the rates are the rates, right?
Correct.
But his rate lock is about to expire, and there was this whole thing that he possibly needed to change homes, and the underwriter would have given him trouble. But he's like, you know what? I don't even care, because I can do a 5-year ARM and it'll be 5.25. And I was like, well, yeah. You're right. I was like, you're okay with the ARM? Because I don't care. But it was just so, and I said he works for DHI Mortgage, so he's that's part of his head, you know. So this is just his daily job. But it was like, you know, I think that's really good that you think in that way, because he could say, you know what, F this, yes, F this. He could say F this, and I'll go and I'll lease an apartment for $1,800 a month.
Yeah, but you're paying 100% interest.
Hello,
right?
I think people are thinking really small and moving from a place of fear. But when you get to hear platforms like this, or when you're around people that have these kind of conversations, it's like, oh yeah, and you just keep moving and you keep doing it. But if you're not around people who have these kind of conversations, like your
find new ones
and your cousins
find
and
new
your
ones.
friends that don't own anything, that like those are the people that are telling you, oh no, the interest rate, the market is this and the market is that. Have conversations with people like this, or listen to podcasts like Selling Houston P.O.V, because this is where you get the information to make big moves. Don't think small, think big.
Absolutely.
Listen to Selling Houston P.O.V. Sorry. Buy a Park Street home and snap with Snap House. You know what I'm saying? and get a loan through that mortgage. What the heck? You know, get your loan, buy her house, use our company. Like, listen to our darn podcast as well, and tag your friends and let them know that they're missing out on our podcast.
Yes.
For sure.
You know, I had one of the newer agents was working with a buyer. Well, a client who said that she was moving down here and she had to decide if she was going to lease or if she was going to buy.
Yeah.
She had a great credit profile. She has some money. And she said she got an email from her and she's like, no, I'm going to go ahead and lease. And she was like, I don't know how to combat that. I said, okay, how much is she looking to spend on a lease? She said, $2,000. I think it was $2,500. $2,500.
I remember. I think this is actually one of my clients.
Yeah. Okay. Yes, because I did tell her, refer you. And so I said, okay, what I want you to do is I want you to take that $2,500 multiply times 12. And so I don't know what that is, y'all. I don't know. 2,500.
About 28,000.
All right. Okay. All right. So you got $28,000.
30,000.
Oh, 30. So tell her, is she really looking forward to investing $30,000 with zero return on investment?
Correct.
Zero. I said, you bring those numbers to her. She called me back an hour later. She was like, Ebony, oh my God. Like, it gave so much perspective to her. I'm like, why would you do that?
Because the average American is not taught numbers in school.
That's it.
Think about that, guys.
That's it. Our business. Or having any sort of business mindset.
Did you learn how to balance a checkbook whenever you were in high school or no? Right?
I did.
You did?
We did. I did.
What school did you go to?
I'm much older than you guys.
You don't have to share that every time. If you wouldn't have known, if you don't say it, nobody knows.
He hates that.
Like, what the heck?
But it's true. So during my time, we learned how to write checks.
But average school person does not.
Average,
you learn how to count your money, but even add, subtract.
Yeah, they don't do that.
Nobody's teaching how to invest.
Hello.
But even regular school is teaching us how to be good employees. Go to school.
That's it.
Get a job.
That's
Stand in line. Follow the rules. And as entrepreneurs, we breaking rules.
Yeah.
We are doing things that everybody else isn't doing, and that's so different from what school teaches us to do.
Oh, for sure.
Everybody needs. There's a right and a wrong answer. There's a right and wrong way to do it. When you're in real estate, it's
when you're in any type of business. I started my first business I started when I was 18 years old. Mm-hmm. You know, and I was broke by 21 and I made it again.
Hey, me too.
You know what I mean? So like as an entrepreneur, like, you know, I wasn't the average. I was a great student. Don't get me wrong. Like I got accepted into Ivy League schools and the whole 9 yards. Oh. My mom was like, no, I just want you to stay here with me and just go to U of H. And I was like, okay, cool. I'll go to U of H. You know, but
go Cougs. Don't do it.
Yeah. Okay. But you know, but I didn't. I saw the opportunity, and I was 17 years old when I saw the opportunity, and I said, you know what, I can pay my tuition or I can start investing in this business. And luckily, like the business opportunity that I did was great, but you know, things happen, life happens, whatever, partnerships end, and then you move on to the next project, and you move on to the next project, and you move on to the next project. So a little bit of insight, I've been an entrepreneur since I was 17 years old.
Same.
I'm 30 now.
And this is your second business.
This is my third business.
Ooh, I love
What is this
it.
for you?
Yeah.
This is still the same business. We just had some really high
Second
highs and
generation
some
of
really
it.
low lows.
Lows,
Yeah. But that's
This is my second
essence of business.
So my mentor told me this is what my mentor told me, and I love this quote. He says, "Do you know what the difference between a homeless man and a millionaire is?" And I said, "What?" And he said, "The millionaire tried one more time."
Yep.
Ooh.
Yep.
That's
good.
That's beautiful,
That's
right?
good.
That's very
Great content for my podcast, Marriage and Real Estate.
Yeah.
Waseem will be there with a woman.
Yes. Yes.
Or whatever you do. With a partner. Okay.
But let's talk about the 2-1 buy down, guys. Can I talk about that?
Yeah, absolutely. Go for it.
Please.
For sure. So the reason why I was brought out today was we have this program. It's called a 2-1 buy down, and actually we have a 3-1 buy down too as well.
Oh wow.
So there's 3 programs that I want to launch that I want to talk about today. One is a 3-1 buy down. So if you're getting seller concessions on your contracts, and if you're working with a real estate agent, try and get seller concessions in this market, because technically it's turning. The market is turning.
Absolutely.
So we're seeing a lot of homes sit on the market a lot longer than it was. We're seeing that a lot of negotiations are coming back into play. And so if you're working with a loan officer and he has these programs, realtors, you get in touch with your loan officers and ask them, hey, what does it take to get a buy down program? And what a buy down program is basically we're able to offer you 2% or 3%. If it's a 3-1 buy down, it's a 3-2-1 buy down, then you get 3% lower on the average rate that you lock in at. So if I lock you in, for example, hypothetical numbers at 7%, then for your first year, you're really at a 4%. You know what I mean?
Mm-hmm.
And then your second year, you're at a 5%,
5%.
then a 6%, and then you get locked in at that 7%.
On what year?
On your fourth year,
You may be gone.
you may be gone.
Yeah.
Oh my
or
God.
you refinance.
Or you refinance.
Yeah, the market has shifted, and
The
now
market
we're
has
back.
shifted,
Yeah,
and now we're back to low interest rates or whatever. It doesn't, you know what I mean? It gives you that security of having that lower payment that everybody wants, right? And being able to get you into that bigger home and better sweet spot. The only way that works though is if you get seller concessions to offset the payment. So for example, you take your payment from what a 7% would look like. Let's say, for example, and these are hypothetical numbers. I don't have a calculator on me. So let's just say for hypothetically that you're at a $2,000 payment a month, and now you're at a $1,500 payment a month, or let's just say, let's even do even more drastic, $1,000 a month, because I've seen some aspects where when we do the 2-1 buy down, you're saving almost $1,100 a month in some payment.
Wow.
So let's just say we go from a $2,000 a month to $1,000 a month. Principal and interest, not including taxes and insurance, guys. Don't call me and tell me, hey, you told me I could
quoted.
Yeah.
He doesn't have your file in front of him.
All
So
right.
calm down. Okay.
hypothetical.
Hypothetical. So let's just say, just for say safe numbers, that's a $12,000. That's $1,000 in savings. That's $12,000 a year. So if we can get seller concessions for $12,000 a year, $12,000 for the first year, and maybe let's just say $300 a second year, you know what I mean? So all that adds up, and as long as we get those seller concessions, and sometimes if you're a little short, then you can bring the difference to the table and we can still get you into the deal. So as long as we get seller concessions to offset those payments for the first couple years, then we're able to get you into those lower interest rates. And it's a savings account for you. So all they do is they take those seller concessions, they put it into an escrow account, and they offset the payment. So that way you're not making that payment.
Okay.
Right? And then if you decide in 2 years that you're like, hey, you know what? Rates came down. I want to refinance. Guess what? All that money that's still sitting in that escrow account gets down to the principal reduction.
Ooh.
So now you're refinancing a lower balance.
So, I often have these conversations, and I think a lot. I tend to get annoyed easily. And we have these clients like, I want 10,000 off the price. Sis, bro, 10,000 don't do much on the price.
No,
Right.
it doesn't.
Can
You want to ask?
Can you say it to the people in the back? Please say it
$10,000
louder.
off of a price for 30 years does not make a difference.
Do you know what
Yes.
do you know what the average?
So what is it off the
payment is like
$25 or something like that.
$25.
Are you hurt for $25?
$25 a month.
If we're worried about 25, guys, if we're worried about $25 a month,
we need to have a whole nother conversation.
Yeah. Now, asking price or right under asking price and $10,000 in concessions takes you a long way.
Yes.
Now I'm saving you $1,000 a month.
I don't know why it's so difficult.
Yes.
I don't know. It's
because
the agents.
Every day. No, you do this
it's
every day.
Yeah.
That's
no,
why
but
it
it's some
makes sense for you.
agents because I am a listing guy. These times around.
Yes, you are.
Okay. So it's like I want $8,000 off the price or 10. Okay, no problem. I'll give you 10,000. You know what? Home warranty's on me. You know what I'm saying? Like, because it makes no sense.
Yeah.
Like that is a silly deal. And if you are a consumer, you need to find a educated realtor because otherwise you getting 8,000 gonna say you. Not even $25.
Right.
What is interesting is I used to coach, I still do, but I've coached many of clients to say, don't take all that money and put down. Mm-hmm. Take this, put it in a savings account, and pay yourself that extra $400, $500 a month. Mm-hmm. You don't need to put it all as a down payment.
Correct.
And then now there's also the option to do the upfront PMI. Mm-hmm. And that would also help with, depends on their situation.
So this 2-1 buy down is a great program. Exactly like Renard said. Instead of coming off $10,000 off the purchase price, guys, we're talking about $25 a month. If we can get $10,000 in concessions, I can save you $1,000 a month, and it goes into your piggy bank.
But that's so much. The conversation is just so much
different
when you say it like that.
Yes.
Jeez.
You have to say it like that. We have to make it plain for our clients too.
Absolutely.
And that's about as plain as it can get. You want to save $25 or would you like $1,100 off your mortgage
for the first year?
For whatever.
And if I'm on the listing side, I'm not helping you. Like, no.
Okay, Bernard.
Okay, go ahead.
Play in the sandbox.
All right, guys.
But at the end of the day, too, like you got to remember. So I'll give you a perfect example. I'm actually working with a client right now. She's buying a house for $700,000. Mm-hmm. She was like, I want to offer $680,000.
Why?
They were like, and I said, okay, well, why? And they were like, well, because the house was listed for $725,000. It's been sitting on the market, and now they dropped the price to $700,000. I'm gonna offer $680,000. And I said I would give them $700,000.
Yep.
And I would ask for $20,000 in seller concessions.
Why not?
I said, and guess what? I took them from a 6.375 to a 4.375. They're saving $1,100 a month their first year, and then their second year they're saving $400 a month.
Nice.
Right?
Wow.
So, and then I said, what's your goal here? And they said, well, in 3 years, we're moving to New York. And I said,
okay.
But then what are you worried about? Yep. And we're under contract and we're closing in 15 days.
Nice.
Educated realtor, educated lender.
That's
lenders.
Right.
Have good lending partners too.
Yes.
No, this is, we could go on forever.
We can. I know. But you got to get to the Astros game.
It's all good. I'm sorry I didn't dress up today.
You look great.
We'll definitely have you back. But what, just kind of finishing up, what do you guys, anything else that we miss? We talked about the rates. We talked about it's not wise to ask for $10,000 off the price. We can do it in a different way. What else?
I need to go to the ladies' room. That's what else.
So let's wrap it up.
All right, Waseem, how can these people contact you? How do they get to you?
For sure. I'm on Instagram. Thanks to Ebony. Ebony is the one that actually created my Instagram account. You know what
That's so funny. That's so funny.
So you can find me on IG, Jet MTG HCX is my company IG, and then I also have a personal one that's WaseemBari. You can call me at 832-721-1392. You can email me at w.barry@jetmortgage.com. I have a website, jet-mortgage.com. So you can literally Google me and you will find me.
He said Google him.
Yeah,
Google him.
Look him up.
If you literally Google me, I'm like the number 3 spot right now when you Google mortgage broker Houston, Texas. Like Jet Mortgage.
How much you pay for that? Well, actually
no. You know what? It's reviews. It's all about reviews.
Whoa, he got those reviews. Google him. You'll find the good reviews, and then you'll get your loan. And he'll tell you how it needs to be structured.
For sure. Yeah. I'm all about helping people. I love the concept of helping people get into their first homes. It's the American dream. Everybody deserves in this country.
Absolutely.
And I love the fact that I'm able to share that with y'all here today.
See,
thank you so much.
That was the energy that
Thank you for
saw and felt.
Well, I was just going to say something about energy. Thank you for sharing that with us. And you can ask Ebony and Aisha. I'm a person off of energy, and I really like your energy.
Thank you.
So I hope that we're able to do deals together, and I hope that you can come back on this podcast and share good stuff with our people that watch us. And I hope this gets a lot of views because the last one did.
Yeah, for sure.
Do your thing, Waseem.
So this is Selling Houston POV. Guys, do not forget to like, subscribe, share. Tell your friends. This is some good stuff we talk about. The previous shows are really funny. This is some good stuff today. I think we had some funny moments as well. But share it with others because that's how we grow this. Like, subscribe, and share. This is Selling Houston POV. Y'all have a good one.